Jay Powell said it's coal in the stockings for the markets this year, but I do not think the markets believe him. And let's take a look at what happened today. Powell came out, they raised rates 50 basis points, which is what the market expected. And there were little surprises in there. We'll talk about that in a second, take a look at the reaction. But the Dow closed down only 0.42 today, 0.61 on the S&P, 0.76 on the NASDAQ, snapping the two-day winning streak. And 50 basis points puts the Fed funds rate at 4.25 to 4.5%. One of the big surprises was a pretty good consensus. 90% of the Fed members have raised their rate target for 2023 to 5.1%. A couple of them a little higher, a couple of them, right in there, but every one of them over 5%. So that means the Fed still has more tightening to do through the end of 2023. That's the key statement. The Fed said we're going to hike rates and we are not going to lower rates. We're going to hike rates until the end of 2023. But they did say, obviously, we're data dependent. We're going to wait and see what the information tells us. They feel like they've made some headway on inflation, but they still have a lot of work to do. So two big takeaways are, one, that he said we are not going to cut rates in 2023. Number two, he said that we are not coming off of our 2% inflation target, because there's a conversation out there whether inflation will ever be able to get back down to 2%, and if that's even the right target. So he did not give any indications of anything in terms of the size of the rate hikes. Obviously, they have their target, which is another 75 to 100 basis points from where we are now, probably more like 75, 5.1 to 5.5 in terms of the terminal rate the Fed's trying to reach. As we have discussed in the past, history says and indicates, well, history says and has proven that inflation will not come down unless the Fed funds rate is higher than the rate of inflation. And so what Powell was saying with his statements of rates, the new terminal rate of 5.1 to 5.5, is that they're expecting inflation to come down into the fours. And that's about as low as it's going to get next year, 4 to 5%. He didn't say that, but that's what he's indicating and telegraphing with that terminal rate target. And then by saying that they're not cutting rates in 2023 at all, that they see rates continuing to increase in 2023 and staying there, that they do not forecast that they're going to be able to get inflation down meaningfully in 2023. And also that they want to see tighter financial conditions because they don't want inflation to continue to get out of control. Right now, financial conditions have loosened significantly with the markets being up like they have been, with rates being down, the dollar being down, and oil down, things like that, wages up. They want to see more headway into the disbalanced labor market, and of course, housing and rents and things like that. So a lot of things out there, a lot of work left to do for the Fed. Here's the dollar down, the VIX down, the 10-year down a little bit, all on that news. And then here's the Dow, continuing its decline, NASDAQ, S&P, all in these ranges. We looked in yesterday's video at last December, and we had that nice rally in December off of the lows, and kind of tracking the same price action, right? Today's the 14th, so let's take the S&P and go back to last year around that time frame, and we had similar kind of action here, right? We had a couple of down days, December 13th and 14th. Market kind of ranged a little bit, really dropped on the 16th, 17th, and 18th. Well, that's a weekend, so 16th, then came back the 17th, and then the 20th was that Monday. And that was the last day down. So the market declined the 15th after a little pop. So kind of this would represent the area we're in now. So the drop overall was about 4%. And that's where it bounced that 7% before, continuing to decline. So is that kind of where we're at now, where, in this time frame, going into next week is when we'll see the market, market will continue to decline the rest of this week into this range low, and then maybe rebound again before it goes down to, test these lows again, if that's what happens. And the market can very well start ranging from this point onward until we get into next year. And recession watch begins. So kind of the all clear right now. Markets again have priced in interest rate risk. They've got to price in higher, a little bit higher for longer. I think that was the one surprise was the Fed increasing their target rate, terminal rate for the Fed funds rate, and their target for that. And no rate cuts in 2023. So right now the market has not priced recession in because it can't. We don't know what earnings are going to look like. We don't know what recession is going to look like. We don't know what the consumer is going to look like until we get through the holidays. So right now, I think we're range bound, probably get a nice little bounce into the end of the year, kind of like we saw last year, and it could be downhill from there into January and February when the next Fed meeting happens. So here's Bitcoin right here. Bitcoin had a nice little pop. Let's see what that was from that range low. Total move of about 9% into today's FOMC, retraced just like the markets back down to about right now 17,800, peaked out at about 18,390, almost reaching out to this whole level here. And off of this drop here, basically, if you look at a fib retracement, about 0.5 of that whole move, which a lot of times is a reversing point for Bitcoin to go down to new lows. So this could be, with the Fed news today and what's going on in the markets, unless something else happens like a Binance blow up or a Tether blow up and news coming out of FTX and Sam Bankman-Fried kind of talking about and revealing, what's going on behind the scenes and all of the other things. Bitcoin could find its bottom in this range here at this 15,005 low, 15,004 and change, and just kind of keep ranging in here for a while until we get through this phase that we're in. But if a blow up happens like Binance or Tether, all bets are off, and Bitcoin is going to go down to some lows and surprise a lot of people, because it can go a lot lower than you think, just like it can go a lot higher than you think. But this range right here, this obviously is all short covering, manipulation, things like that, algorithmic trading. As we've talked about before, Ethereum, same exact price action, pretty much. XRP, most of the altcoins didn't participate in a lot of that move, like Bitcoin and Ethereum did. But a lot of this today was set up on the algorithms with, if the Fed says this, then markets do that. Initially on the 50 basis point rate hike, the markets were up ahead of the Fed meeting, anticipating 50 basis points. But again, what dipped the markets, what spooked the markets, if you will, or brought them down was, the surprise of a new target on the Fed funds rate. Market wasn't expecting that, but that's not a huge deal. And the talk of we're not coming off the 2% inflation target, and we're not anticipating any rate cuts at all in 2023. He didn't even say, well, the Fed fund rates target. So the question is, at what pace will they raise rates going into next year? And likely they could back off and start doing 25 basis point rate hikes next year. So the market's priced all that in. And of course, any kind of news, can rock the markets, especially in the crypto world. So these are the things I'm looking at. I'll see you in the next video.